Good afternoon, everyone, and welcome to Buying a Home in Eindhoven webinar. Thank you very much for taking out some time out of your most likely very busy days to gather some information on the buying market and specifically on the Eindhoven buying market. Good to mention beforehand is that today's session will be recorded and shared. So if you do need to leave at any given moment, don't worry, we'll share all the slides plus the recording of the whole presentation with you most likely tomorrow. So before the end of the work week, and otherwise, well, for sure, before the end of the weekend. All right, let me introduce myself. My name is Ludo. I'm an expat buying manager at Expat Housing Network. Typically, this webinar is given by my colleague Giovanna. She is also the point of contact when it comes to our Eindhoven clients, but unfortunately, Giovanna had a final inspection with a couple of her clients actually, so I'll be taking over for today. But why do I say this is because I am typically responsible for the Amsterdam area, so a little bit different part of the Netherlands. But luckily the Netherlands isn't that big, so that helps. I'm from the Netherlands, born and raised, but lived in the US for a couple of years. I am a proud father, not of any children, not yet. However, if I hear my girlfriend, it's not going to take much longer. But I'm currently a proud father of two cats. So if you guys are lucky, then they might jump in front of the screen. I currently live in a monumental property, but I've lived in a property from the 80s. I've lived in a property that is from the 1600s. I've lived in a new build for a very long time. And I just bought a small monumental house with a garden in Amsterdam North. So let's see how that's going to be. So what are we going to be talking about? Well, quickly an introduction, of course, about myself, but also about EHN. The market info is very important to know, of course, in what kind of market are we currently working. Then some market drivers, some key points on why the prices have increased over the last couple of years. Also let you know what you need in savings, how much it's going to cost to initially purchase a property. We'll talk a little bit about renting versus buying, what the pros and cons are from both. And then we'll, of course, let you know some tips to win in the current market. Things like value, what kind of due diligence, what a good offer looks like, that kind of stuff. And finally, we'll show you a timeline. Now, the timeline will also end with a Q&A. So if we do have questions after the webinar, feel free to pop them in the Q&A. We'll go over them live to make sure that all the questions are answered. All right, so introduction of Expat Housing Network. I'm a big believer of this quote: greatness is achieved in the agency of others. What do I mean with that is that we have a wonderful buying team at EHN. We, of course, have Giovanna. She's from Brazil. She speaks English, Portuguese, Spanish, and fluently Dutch as well nowadays. Mateusz, he is from Poland, speaks English and Polish. We have myself. We have Rick, also from the Netherlands, but has lived in Colombia and South Africa for a while. Well, we have Miss Amy from the US and Larissa, who is also from Brazil. So a very diverse team with knowledge from around the globe, I would say. All right, well, we are no traditional real estate agents. What do I mean with that is that we help with buying, renting, letting, and selling. We are primarily focused currently on buying and renting, meaning that we're specialized in securing properties for our clients. And from that demand, we eventually started letting properties and started selling properties to our old clients. But I think it's really cool to have a basis of securing property, and from there on, sell and let those properties as well. We charge a percentage of the appraisal value. Now, this is a big one. We don't charge on the asking price or on the purchase price, but on the market value of the property. That means that if the purchase price is higher than the market value, I don't make any money on that. It's only on the market value, which we think is the most fair way of charging a fee to our clients. Well, as you saw on the previous slide, is that the majority of us are either expats ourselves or have lived abroad as an expat, so we know what it's like to settle in a new country. Then the added value of EHN, well, they definitely, selling agents definitely take offers more seriously when it comes from us. They know that we've done our research. Working with expats sometimes can be a little bit different than working for people directly from the Netherlands. and yeah, having a strong agent behind it really will make a difference. It's quite a lot. Yeah, quite often it's possible for us to book viewings when it's no longer possible for consumers themselves. A lot of selling agents, they actually have specific viewing dates for well, potential buyers who have an agent. So yeah, sometimes I get clients on the phone saying, Ludo, it's impossible for me to book a viewing, but when we call, a lot of agents are willing to free up a slot for us. Well, very important one is definitely that we support by reviewing Dutch legal and property documents. We'll make sure that the medical file, let's say, of the property is in a good state. We'll touch base on this one later on, but helping define the market value through market data, making sure we know what the market value is. Why this is important, we'll show you later on. Of course, we will inform you about rules and regulations, and we'll definitely make sure that you guys don't make the same mistakes as we made when purchasing our first homes. Some market info. Well, to share some numbers with you guys. So what we saw, and that's pretty interesting, is the average purchase price in Q3 of 2023 was 422,000 euros. Well, if we compare this to last year, last year I think it was around 405. So there was definitely an increase there. If we saw the average price in Q2, that was 410. With new builds, it's a little bit higher. We see an average purchase price of 474. Well, looking back in the years, it's mostly been increasing, but at the end of 2022, prices were decreasing a little bit. But we see that since the Q2 of this year, yeah, the market has stabilized again, and prices seem to be increasing again. ING came with a new prediction for 2024 that they expect the prices to increase with 4% by the end of next year. So yeah, that's quite promising to see that it is still a very good time to purchase a property. Then some market figures specifically for the Eindhoven region. Well, in Q3 of 2023, there were more than 1,400 properties sold. This is a little bit more than well, Q3 last year. It is a decrease though from last quarter, but yeah, this is typical. This is very seasonal, and we see that quite a lot. A little bit over 1,100 properties for sale. The average purchase price for Eindhoven is a little bit higher than the average purchase price for yeah, the majority of the Netherlands. But of course, this has to do with the fact that it's just very desirable, or yeah, it's a desirable place to live. A lot of people enjoy living in the Eindhoven region. We see that both from compared to last year and compared to last quarter, the prices have increased in Eindhoven. That correlates directly with the average purchase price per square meter. And the sale time has been yeah, a lot longer compared to last year, but since last quarter, properties are moving quicker for sure. So some interesting numbers. Then what has the what is the reason why the prices have increased over the last couple of years? Well, there are a couple of reasons, but mostly fiscal benefits. Currently, there's a transfer tax exemption at play, meaning that if you are a starter in the market, well, what is a starter? If you are under 35 years old, if you're buying under 510,000 euros, keep in mind the 510 is starting from 2024. But I'm going to mention the 510 because that's going to make more sense. So under 35 years old, buying under 510,000 euros and using the exemption for the first time, you are actually exempt from paying transfer tax. So instead of paying 2%, you're paying 0% over the purchase price. So that can save you quite a lot of money. There's an interest rebate scheme currently. What that means is that when you're doing your annual income taxes, you can actually get back around 37% of the 37% of the taxes that you've paid over your mortgage loan is what you can get back. So of course the repayment over your mortgage is just your repayment, but the interest that you pay over that loan, 37% you can get back. So that's quite a substantial amount, making your loan pretty much cheaper and therefore more attractive to purchase a property instead of rent a property. Well, there are no capital gains in the Netherlands and no capital gain taxes. That means that if you make a nice profit on your property and you decide to move on, you can put that profit directly into your pocket or a new property. You don't have to pay any taxes onto that. Now, this is something that is not too applicable anymore because it's ending as of the 1st of January 2024. It's not applicable anymore. But before, Dutch residents were able to make a tax-free parent donation so to their children via a purchase of a property. In 2022, this was 100K. This is now 33, I think, 33,000 euros. And next year it will be gone, actually. Well, of course, the low interest rates were a big role, or played a big role in driving the prices up. The interest rates were, I think, around 1.5 to 2% 2 years ago. Well, these have increased, of course, but still at a low rate. Now, in my opinion, the 1.5 to 2% was definitely not a sustainable percentage. Obviously, it's very nice for the people that got a interest rate at that amount, but it was not a healthy interest rate. 4% is much healthier, so to say. Well, the rents have been increasing drastically, and we don't expect this to end anytime soon. But this is a big reason for current tenants or people that are currently renting to start looking at purchase properties maybe a little bit sooner than they would on average. This just drives people to the purchasing market. And this all comes down to a final point of lack of supply, or in other words, more people looking for a property compared to the amount of properties available. Because there are so many fiscal benefits, because the interest rates are very attractive, because the rents are so high, a lot of people are currently in the purchasing market and without enough properties available. So simple economics example, when supply is lower than the demand, or when the demand is higher than the supply, then prices tend to increase. So that's what we've been seeing over the last years. Then the current market is a little bit different. We saw that since the summer of this year, the market has stabilized a little bit. This had to do mostly with the increase of the interest rates. Some people were a little bit hesitant, not sure where the market was going, but also the interest rate market has stabilized around the 4.5%. Because of this, there are more active listings. There are a little bit less people on the market than I would say a year ago, but I do have to say since October, November this year, this has been going up as well. So there are more active listings compared to last year, but it is not where we want it to be. Again, this correlates directly with less overbidding. When I say less overbidding, I don't mean no overbidding. Let me be clear about that. But it is less than last year and the couple of years before that. But we're now talking, let's say, 20,000-30,000 over the asking price, whereas in the past it was more like 50,000 or 60,000 euros. Now keep in mind there's still a lack of supply, and currently that also has to do with the fact that the material costs have been increasing. Due to COVID, actually, a lot of the infrastructure for the transport of materials have become more expensive. But also due to stricter rules regarding nitrogen, for example, materials that might have a harmful effect on the health, that just all results in a high material cost. Then some things that you guys should be aware of. Well, first of all, we have the self-occupancy obligation. In a lot of municipalities, and also the municipality of Eindhoven, you are not allowed to rent out your property for the first 4 years if your WZ value is 355,000 or lower. What does that mean? Keep in mind, the WZ value is not the market value of the property. It's also not the purchase price of the property. It really is the WZ value, which is the value that the municipality gives to your property. 9 out of 10 times the WZ value is actually lower than the market value or the purchase price. If you have a WZ value of higher than 355, you are allowed to rent it out in the first 4 years. But if you have a WZ value lower than 355, you are obligated to live in the property yourself for the first 4 years. Now, the NHG threshold is going to increase, which is super, super cool. This means that you are able to make use of the National Mortgage Guarantee. Instead of having a threshold at 405, you can now purchase up to 435 and still make use of it. The NHG, it's quickly explained, a insurance arrangement, I would say, from a bank institution, where if you can no longer pay for your mortgage, for example, if you lose your job or your relationship ends, if you become disabled, God forbid, or if you're even worse, your partner dies or anything like that, just terrible things happen, and you have to sell your property, and at that point, the property value is lower than the rest loan that you have. Typically speaking, you would have a rest debt with the bank. If that's the case, then the NHG will actually take over that debt. So you will never be able to stay behind with a huge debt if you need to sell your property. That's a big plus, but not the biggest, I would say, because the chances of something like that happening isn't always huge. But when having a NHG, when having a mortgage under NHG, you will also get access to lower interest rate, because the bank really likes people with extra insurance. So they would like to incentivize that by giving out lower interest rates. So if you are buying at 435 or lower, I would definitely recommend you to take a mortgage out of from NHG. And then the final news point is that the mortgage norms will increase. Now, depending more on your spending ability, actually, and also on the energy efficiency of your property. So if you have a high energy label, you'll be able to borrow more, also to incentivize buying more energy sustainable properties. Your student loan, if you have a student loan, it will also be factored in a different way compared to the last couple of years. So definitely interesting and a positive thing for people who are going to be taking out a mortgage. Now, something that isn't mentioned in this between these three news articles is that also the transfer tax exemption, I talked about it before already as well, but I just want to mention it again, is going to be increasing from 440 to 510. So there's also a little bit more room there to make use of that exemption. Then what would you need in savings before you start the purchasing process? Well, we have a list of costs here. First of all, the transfer tax. Well, typically speaking, you'll be paying 2% of the purchase price as transfer tax, assuming that you cannot make use of the exemption. We'll need to go to the notary. We'll need to go to the notary for the mortgage deed and the transfer deed. Both deeds, depending a little bit on the notary you move forward with, will cost you between 700 to 1,300 euros. If you're going to get consult from a bank or a mortgage advisor, that will be between 1,500 to 3,400 euros. We from Expat Housing Network will charge you 0.75% or 1% of the appraisal value, depending a little bit on the package that you move forward with. If you do decide to get a mortgage, then you'll need to have an appraisal. The appraiser will charge you 700 to 900 euros. The technical inspector who's going to technically inspect the property is charging 465 euros. If you don't master the Dutch language by the end of the whole buying process, when we go to the notary, in other words, then you'll need to have a sworn-in interpreter present at the notary. Unfortunately, I'm not allowed to do that. Giovanna is not allowed to do that. Your friends or colleagues are not allowed to do it. It really has to be a court sworn-in interpreter, someone who has a diploma on all these languages. Now, if you, to give a little bit of context on the bank guarantee, during the whole buying process, at one point, you're obligated to make a 10% deposit to the escrow account of the notary. This to give the buyer an incentive to complete their whole buying process. Of course, we don't expect everyone to just have 10% laying around. So you can also get a bank guarantee. This is where you ask the bank to make the deposit on your behalf. I see some people are raising their hands. If you have a question, feel free to pop it in the Q&A, and then I can answer it live as well. And then if you want to make use of your the National Mortgage Guarantee, the NHG, you'll need a one-time fee of 0.6% of the mortgage amount. This is a one-time fee to get access also to the lower interest rate. Now there's a third column with the question if it's tax deductible or not. And what we see here is that all the costs that are related to mortgage are tax deductible. So the mortgage deed, the mortgage advisor, the appraiser, and the NHG fee. Now, if you are obligated by the bank to have a technical inspection done, then the technical inspection is actually also tax deductible. I got a question if the presentation will be shared. Yes, the whole recording will be shared tomorrow to the our email addresses that were shared with us. All right, then let's talk renting versus buying. It may be a little bit strange to talk about renting in a webinar that is dedicated on buying, but I think it is important to know what the differences are between the two. So here we have two properties in a very similar neighborhood, both between, let's say, 98 square meters and 105. What we see here is that the Adolf van Kordenbachstraat, so the purchase property, well, the asking price was 400. We were able to purchase it in this example for 405. So you have a mortgage of 405,000 euros. You were able to get a mortgage or interest rate of 4.15% with your national mortgage guarantee. This would mean that your gross monthly payments are a little bit over 1,900 euros. Now, with the interest deduction scheme currently in the Netherlands, you have your net monthly payments of 1,500 euros, which means that it's going to be pretty much the same as what you're going to be paying for rent for a same kind of property. But within that 1,500 euros of your mortgage payments, you're also paying off your loan, of course. So yeah, you're paying the same amount, but you're also for that 1,500 euros able to actually purchase something at that point. Now, I always get a question, from what point is it going to make sense to purchase something? Because yes, you do have your closing fees, right? The cost that we were talking about before. Well, if your closing fees are 12,395,000 euros, 12,395 euros, and that would mean that you're breaking even at 22 months. So after 22 months, yeah, it's going to make sense to purchase the property. Then you'll break even with your closing fees, and from there on, yeah, you're putting money in your own pockets by repaying on your mortgage. So yeah, it's not that long, even 22 months. It's sooner than 2 years. So for everyone thinking of staying for longer than 2 years, yeah, I would definitely recommend to purchase a property. All right. Then good to see what happens after 5 years, because that, I would say, typically is when it starts to make financial sense, and also it's going to be the biggest financial benefit. On the left, we have your rental payments of 1,500 euros per month. Well, after 5 years, that equals to 19,000 euros that you've paid in rent. This is going to sound maybe not so nice, but it pretty much means that you're paying off your landlord's mortgage, and you've paid your landlord 90,000 euros, who is then at that point repaying on his mortgage. Unfortunately, you've built up absolutely nothing in regards to equity at that point. When we move forward to the or move to the right to the purchase property, you've made pretty much the same amount of payments, the 91,429. But part of that is also equity, and that's the 37,156 euros. So assuming that you pay or that you sell your property after 5 years again for the 405 that we saw before, then you're putting almost 40,000 euros in your pocket, which you can use for your next property or buy a nice car or whatever. And that is just assuming that the value of the property has not increased at all. And we can actually make the assumption that the value of the property is going to increase, especially over a time span of 5 years. So definitely, something to take into consideration. If you, by the way, see the door opening behind me once in a while, it's my cats coming in and out. I see that we have a question already indeed from an anonymous attendee. I'm under 35 years old, but my parents would make the bank transfer. Can I still purchase without the transfer tax? I think that's a valid question. My advice here would be to have your parents make the bank transfer to your account, and then you make the bank transfer to the notary. Then you are exempt from paying the a transfer tax. Because if your parents are making the bank transfer directly to the notary, that would mean that your parents are also becoming owner of the property. And if you're going to be living in it, it would be an investment property for them. So the best way to do it is if your parents transfer the money first to your account, and then you pay from your account to the notary. And from there on, you don't have to pay the transfer tax. Then some tips to win in the current market. First of all, value, value, value. This is a very important one. Why is that? Is because the market value or the appraisal value is the maximum amount that the bank will give to you. Of course, it depends a little bit on your salary and that kind of stuff, but assuming that you're able to make you reach that market value capacity, then the market value is the maximum amount that you get from a bank. Well, to work from an example, here we have a property with an asking price of 395,000 euros. Keep in mind, the asking price says absolutely nothing about the market value of the property. The agent can literally put the property at 100,000 or 1 million, and that person can do whatever he or she wants. Does not reflect the market value in any way. Well, in this example, the asking price 395. What we see after doing some research is that the market value is actually 415,000 euros. Well, keep in mind that the difference between 395 and the 415, that is going to be covered by the bank. So that is not a problem at all. No need to spend a penny out of pocket for that part. However, it's currently an overheated market. Maybe the property is very, very popular. And what we see is that the purchase price is 435,000 euros. So we had to overbid 20 out of pocket to actually reach the purchase price and secure the property. Now, what we hear a lot is that, oh my God, I need to overbid 10% over the purchase price, or sorry, over the asking price. Well, yes, you have to overbid 10% over the asking price, but as I mentioned, the asking price doesn't say much. Actually, you had to overbid 4.8% over the market value, and the 4.8%, that's the only valid number of overbidding in my opinion, because again, the asking price doesn't say anything. Well, we might have a different agency. That agency lists the property at 375, still the market value at 415, still the purchase price at 435. All of a sudden, it seems that the overbid was 16%. Well, actually, the overbid is still only in brackets 4.8%. So definitely something to keep in mind. I can hear the question coming up already. It's not on the screen, but I'm going to answer it anyway. How do we determine the market value? Well, that's a very valid question, and definitely not something of a secret. We use the exact same method as an appraiser, and what that is that we use the comparable method. So we compare the property that we want to buy with comparable properties. So properties that are comparable in regards to location, size, amount of bedrooms, amount of bathrooms, energy label, ground lease, outside space, if it has solar panels, all that kind of stuff that is going to have impact on the value. Then we look at the transaction prices of those comparable properties, and we want to find the most recent ones, of course. Well, we look at the purchase price per square meter and then multiply it with the amount of square meters that we are trying to buy. That is roughly the market value. Of course, there are a lot of discrepancies and corrections needed. That is where we come into play, of course, and we will do this whole market price research for you as a buying agent, and our expertise is also in correcting the right direction to maybe add 2,000, or we have to decrease 2,000, that kind of stuff. The current market has changed a little bit to some degree, where for example, have a property of 450, that the market value is actually lower than that, where we have a market value of 425. If we still purchase the property at 450, of course, it seems like we did a great job. We didn't have to overbid anything. but actually we did. We still had to overbid 5.5% because the difference between 425 and 450 still had to come out of our own pocket. The ideal situation is where we have an asking price of 450, market value is 425, and we're also able to purchase at 425. At that moment, it looks like we underbid 5.5%, but in reality, we know that we did just a very good job where we didn't have to overbid anything. We purchased at the value of the property. Now, what does a winning offer look like? And funny enough, a winning offer typically looks like offering a good price and not necessarily the highest price. Now, what do I mean with that? If we have in the example before, we had the market value of 425. If we offer 500, I'm pretty sure that we have the highest offer. However, if we also say in the offer that we need a mortgage of 500, we're never going to get the offer accepted because the value is just not at 500. The bank will never give us 500, and the selling agent knows this. So the selling agent will never advise their client to accept our offer because it's just not going to make sense. If we say we need a mortgage of 425, but we're willing to make an offer of 500 and cover the difference out of pocket, in my opinion, quite a high offer, so I wouldn't recommend to do that. But for the sake of the example, then we've offered security to the seller as well, and we can show, look, we've done our research, we know what we're talking about, and yeah, we are willing to add money out of our own pocket to make the highest offer in that sense. Now, offering the least amount of hassle is something to take into consideration as well. What I mean with that is not adding too many clauses in per offer. Of course, we can have a technical inspection clause in there. Of course, we can have a financial clause in there, but adding that you want to double check the insulation, that you want to double check the energy label, that you want to double check the roofing, that you want to double check. I mean, the more things we add into the offer, the more scared the sellers are going to be, and more unlikely they're going to accept your offer. So there's a balance between doing enough research before making an offer in general, and then doing enough research in our due diligence period, but at the same time not scaring off the sellers. Now, the last one is offering a personal touch, and that's a big one as well. And that's just describing who you are, why you like the property, what you're going to be using the property for, but also explaining what kind of job you have, what your family situation looks like, all these kind of things, to show to the sellers that you're going to take just as good care of the property as they did, that you're going to be a great fit in the neighborhood, but also, for example, showing what kind of work you do. In other words, showing that you have enough financial means to actually get a mortgage accepted. All that kind of stuff is going to contribute to getting the most attractive offer. And then due diligence. This is a very important one, of course, doing your due diligence. In other words, having the technical inspector and the appraiser come by. Well, the technical inspector is obviously going to technically inspect the property, and the appraiser is going to put the official market value on the property. Now, my question to you guys, do we book these third parties before, or do we book them after the offer is accepted? And I'll let you put that in the chat. So I'll wait a couple of minutes to see what your answers are going to be. Do you guys think we book them before or after the offer is accepted? I won't hold the tension much longer. The correct answer is right here. That is after the offer is accepted. Now, why is that? It's because what we saw in the previous slides is that the technical inspector and the appraiser unfortunately don't work for free. So that means that if we have the technical inspector come by and the appraiser come by, they will charge you 800 euros, 465 euros. You're already spending almost 1,300 euros on a property that you might not even get your offer accepted. So let's say we have to make 2-3 offers, then you're already spending 1,200 euros times 3 on a property that you haven't secured yet. So what we do is we have the technical inspector and the appraiser come by right after the offer accepted. Now, luckily in the Netherlands, we have around 1.5 weeks between getting the offer accepted and actually signing the purchase agreement to do our due diligence. So within this week, we'll have the inspectors come by, and within this week, we'll also receive the reports. Now, if there's anything in the report that is not up to our expectations, for example, all of a sudden, there's a huge leakage, or there's a lot of a mold or anything like that, we can cancel the purchase without any consequences. Only from the moment that we sign a purchase agreement or we sign a purchase contract, you are legally tied to the purchase. Now, I do have to say, as a private buyer, you actually get an additional 3-day cooling off period. That's what we see here, or a reflection period, where you can still pull out without giving any reason. Only you as a buyer have this. The seller does not have this. But yeah, from the moment that you sign the purchase agreement, that's the moment that you're tied to the purchase, and that from there on you have like legal obligations and such. All right, then to give you a broader idea of the timeline, I'm just going to show it in general. Well, of course, at one point we'll need to start, right? You'll be searching on Funda to see if there are properties available that meet your requirements. From there on, we'll book a viewing. We'll need to go to the viewing. We'll be there to answer any questions that you might have, but also ask the right questions to the selling agent. Well, from there on, we will, of course, check if the medical file of the property is okay. So the property document review, we will do a price research to determine the market value, and we'll be in contact with the selling agent to get the most updated information on the kind of properties that, the kind of offers that are currently in. Well, at that point, we submit our final offer. A couple of hours sitting like this, hoping to get some good news. If we do get good news, that would be the moment that we start doing our due diligence, what we saw on the previous slide. So we have the appraiser come by, the technical inspector, make sure everything is up to our expectations, and from there on, we sign the purchase agreement. Now, immediately when you sign the purchase agreement, you can also start the mortgage application. You can do this before the cooling off period has ended. Now, the mortgage application, I would say, generally takes, let's say, 3 to 4 weeks. Some mortgage advisors can even do it in 1 to 2 weeks. So my advice is to work with a mortgage advisor. Having that said, by the way, feel free to pop your email address in the chat as well. Then I can send a mortgage advisor your way that we work with a lot and are specialized in expat mortgages as well. So that would be a nice addition. But yeah, mortgage application takes 3 to 4 weeks. Once that is approved, not a whole lot can go wrong anymore. Your property has been secured, the financing has been secured. So from there on, we just wait until the transfer date. Now, around 1 week before the transfer date, we'll receive the statement of completion. In other words, the final invoice of the notary. This has my cost on it, the mortgage advisor's cost, but more importantly, the purchase price, the transfer tax, municipal taxes, the notary cost, all that kind of stuff is going to be on that invoice, and then the notary pays everyone accordingly. Then on the transfer date itself, we'll have first a final inspection at the property to make sure that the property is still in the same condition as we've agreed upon. All the walls are still standing. There's no furniture that has not been agreed upon. There's no trash on the floor, well, all that kind of stuff. And then we go to the notary. At the notary, we'll sign the transfer deed where you officially get ownership, and we'll sign the mortgage deed where you're officially in debt with the bank. And that would be the moment that you also get the keys of the property and you can move in. From there on, you're the owner, so you can start renovating or do whatever you've planned with the property. Now, you still have a rough 2-month liability term where you can still go back to the sellers for any things or any thing that should be working but isn't working. For example, if one of the radiators isn't turning on, the heating isn't turning on, if a faucet is leaking, all that kind of stuff. But that in general terms is the timeline. Now, this generally takes around 3 to 8 months, I would say, depending on, of course, a lot of variables, how active you are, how competitive our offers are, but also how quickly the selling party can transfer their property. All right, then our fees from EHN's perspective. We have 3 packages for this webinar. I think the first and the second one are more important, the Smart and the Complete package. Well, the Smart package, I would say, is more for the independent buyer, someone who has maybe gone through the buying process before already, who speaks the language or has enough time to translate all the documents and get very involved in the process. This is where, of course, we'll have an intake, answer questions where you have them. You'll have access to a personal buying manager. We'll review the property documents and we'll do a price research. We'll be in contact with the selling agent to negotiate and submit the final offer. We'll review the purchase agreement, make sure that you know what you're getting yourself into. We'll also book the third parties for you. So this is the technical inspector, the appraiser, and the notary. Of course, we'll go through all the documents that come out of the technical reports and stuff. And then we're there for the full pre-transfer support up until the moment that you sign the transfer deed. Now, this package is 0.75% of the appraisal value, including VAT. Keep in mind the appraisal value being the market value of the property. It's a value that is determined by an independent third party, so I don't have any impact on that value. Then we also have the complete package. The complete package is more for, I guess, for people who have not gone through the process before, or just don't have enough time to deep dive in the process and do all the research themselves and that kind of thing. Here, of course, again, you will have an intake, you'll have access to a personal buying manager. We'll also schedule the viewings for you. We'll attend the viewings with you. So again, be there to answer any questions you might have and ask the right questions to the selling agent. We'll, of course, do the property review where we do a price research and a property document review. We'll submit the offer and negotiate if needed. Contract review, third-party booking, and then we'll also attend all the inspections like the appraisal, appraiser, notary, and technical inspection. And we're also there for the liability term. So if there are any things that need to be handled during the liability term, you can reach out to us and we'll make sure that things are fixed accordingly. This package is 1% of the appraisal value, again, including VAT. Now, we also have a extra package, the new build package. Of course, the process when buying a new build pre-construction property is a little bit different. This is where we'll also do some search and registration. We'll review the documents. We'll attend the meetings with the developers and everything else that you can expect from an agent. That's a flat fee of 3,450 euros, again, including VAT. All right, then let's move forward with the Q&A. I can imagine that you guys might still have some questions. If you do have them, please pop them in the Q&A button. I see we already have a question with the question if our packages include mortgage advisory costs or a notary. No, our package really is, or a fee is for our service. So the service of securing a property and guiding you through the whole process of the buying market, giving you consult where is needed throughout the buying process. The mortgage advisory is something else where a mortgage advisor will be able to assist you with. So how I typically say it is, are specialized in securing the property. Mortgage advisor is specialized in securing the finances. We will help you with finding a notary, and I can definitely help you with finding a mortgage advisor as well, of course. But the costs related to the notary and all other third parties, they are on top of our fee as well. So everyone has their own fee in that sense. Any other questions? I'll leave the Q&A open for a bit. In the meantime, if you guys are interested in speaking with a buying manager, either with Giovanna from Eindhoven or with me or with someone else, then when you have the recording tomorrow, you can press this button and then you can schedule a call, no strings attached, and we can talk about your personal situation and already give some advice on what is possible and what isn't. All right, I don't see any more questions coming in. Then I would like to thank everyone for joining today. I hope to speak to you guys soon. Enjoy the rest of your evening. And if you have any follow-up questions, you'll receive the recording tomorrow. Just reply to that email, and then we're sure to get the answers where they're needed. All right. Have a great one, guys. Thanks very much.